In The Intelligent Investor, Graham explains that IQ has nothing to do with the intelligent investor, but rather the investor's emotional intelligence. This emotional intelligence is dependent on patience, discipline, and an eagerness to learn. Graham explains that you must be able to harness your emotions and think for yourself. In 1998, long-term capital management lost more than $2 billion in a matter of weeks on a huge bet that the bond market would return to normal. At the beginning of 1998, long-term capital management had $4.2 billion, of which $2 billion was lost to the bond market. This loss contributed to a bailout of $300 million from Bankers Trust, Barclays, Chase, Credit Suisse First, Boston, Deutsche Bank, Goldman & Sachs, Merrill Lynch, J.P. Morgan, Morgan Stanley, Solomon Smith Barney, and UBS. There was an additional $125 million that came from Societe Generale and $100 million that came from Lehman Brothers and Paribas. Long-term capital management had borrowed so much money that its collapse nearly capsized the global financial system. As intelligent as Sir Isaac Newton was, he lacked the emotional intelligence of the intelligent investor. In the spring of 1720, Newton pulled his stocks from the South Sea Company and made a profit of 100% at £7,000. Though it may not look like much, £7,000 would be equal to £1 million or $1.7 million today. In a compulsive move, Newton then decided just a few months later to reinvest in South Sea Company and lost £20,000 or $32,400, which would be equal to $3 million in today's market. Newton may have been the most intelligent man in the world, but because of his lack of emotional intelligence, he failed at an investment that could have made him a lot of money, especially if he had just held onto the £7,000. So, let's say you fail at investing. According to Graham, it has nothing to do with stupidity and everything to do with a lack of emotional intelligence. This emotional intelligence is what gives us the strength to make the right decision, instead of making the wrong decision that could ultimately destroy us. Like Graham puts it, an intelligent investor is more a matter of character than a matter of brain. Like Isaac Newton, or long-term capital management, of whom I'm sure had people with high IQs working for them, it was nothing, because in the end, it hurt them. In point of fact, Graham strongly believed that a high IQ or high SAT scores meant nothing in the eyes of investing. The worst market crash since the Great Depression, with U.S. stocks losing 50.5% of their value, or $7.4 trillion between March 2000 and October 2002. There was also a far deeper drop in the share prices of the hottest companies in the 1990s, including AOL, Cisco, JDS, Uniphase, Lucent, and Qualcomm, plus the utter destruction of hundreds of internet stocks. Accusations of massive financial fraud at some of the largest and most respected corporations in America, including Enron, Tyco, and Xerox. What do these have to do with the intelligent investor? A complete lack or disregard of emotional intelligence. Even the bankruptcies of such once glistening companies as Conseco, Global Crossing, and WorldCom have proved the existence of unintelligent investors, making mistakes. Much of this damage could have been and was avoided by investors who learned and lived by Graham's principles. As Graham puts it, while enthusiasm may be necessary for great accomplishments elsewhere, on Wall Street it almost invariably leads to disaster. By letting themselves get carried away on internet stocks, big growth stocks, and stocks as a whole, many people made the same stupid mistakes as Sir Isaac Newton. They let other investors' judgment determine their own. They ignored Graham's warning that the really dreadful losses always occur after the buyer forgot to ask, how much? Most painfully of all, by losing their self-control just when they needed it the most. These people proved Graham's assertion that the investor's chief problem, and even his worst enemy, is likely to be himself. The intelligent investor will always realize that investing becomes more risky as the prices rise, and not the other way around. The intelligent investor dreads a bull market, since it makes stocks more costly to buy. The defensive investor must confine himself to shares of important companies with a long record of profitable operations and in strong financial conditions. Aggressive investors may buy other types of common stocks, but they should be on a definitely attractive basis as established by an intelligent analysis. An intelligent investor will purchase shares or well-established investment funds instead of creating their own stock. You might also utilize one of the common trust funds, or commingled funds, operated by trust companies and banks in many states, or if his funds are substantial, use the services of a recognized investment accounting firm. This will give the investor professional administration of his investment program through the standard investment lines. This would make easy the dollar cost averaging, which means the investor would invest in common stocks with the same amount of money each month or each quarter. This ensures that the investor buys more shares when the market is low, so he can end up with a satisfactory overall price for all his holdings. This method has become known as formula investing. No matter which way you look at it, using emotional intelligence is the only way to go. As Graham had pointed out for so many years, intelligent investing has made companies stronger in the financial field. It is my belief that the intelligent investor will be required reading for future investors that wish to be successful for years to come. Many people swear by Benjamin Graham, and even investors like Warren Buffett looked up to him. Graham's wisdom of value investing shields investors from substantial error and teaches them to develop long-term strategies. The Intelligent Investor is literally the stock market Bible and has been since it was first published in 1949. It is truly amazing to find that investing has not changed in 65 years since it was first published, yet there are many that fail to remember its content. Over the years, market developments have proven the wisdom of Graham's strategies. Why wouldn't they be able to prove it? Graham himself proved the intelligent investing is real and exists simply by pointing out foolish investments and mistakes like that made by Isaac Newton in long-term capital management, or companies that went from the frying pan and into the fire like Enron. We can truly believe that the intelligent investor is clearly grounded in truth.